So you guys have probably experienced or heard that home ownership is the American dream. And with that American dream comes some level of responsibility. Yep, we are talking about adulting. And if you've ever owned a home before or had a mortgage before, you know all about this kind of adulting. Now, in today's video, we're going to be discussing strategies around your mortgage and potentially discussing some ideas around refinancing your current mortgage. So, if this is of interest to you, stay tuned. We've got lots coming in this video. Hi, everyone. I'm Katie Evans, owner and lead agent of the Living 48 real estate team. Welcome to another one of our video blogs, our vlogs. We are so glad to have you here. Today, we are talking about adulting. Specifically, we are talking about mortgages and potentially refinancing. So if you've got a mortgage, you already know that this is probably one of the most substantial financial obligations or commitments that you have ever undertaken in your entire lifetime. Maybe the biggest one you ever will undertake. So just because you have a mortgage, you've secured that mortgage and you are currently paying on that mortgage does not necessarily mean that you are locked into those terms for forever. So in today's video, we want to talk about refinancing a mortgage and if that is something that is a right or a good or a financially savvy move for you at this time. So first of all, let's go ahead and talk about what is mortgage refinancing, okay? So mortgage refinancing basically is taking your existing mortgage, what is left of it, and replacing it with a new loan. Usually that new loan has different terms than the original one that potentially will either allow you to pull equity out of your house or it will allow you to have a better interest rate, might be shorter in duration, might give you a lower payment monthly. There's a lot of different reasons or ways that you can structure a refinance for your specific financial goals. So when might that option of refinancing actually be beneficial to you? Well, I've got three different times that it might be to your benefit to do one. The first one is going to be lowering your monthly payments. Of course, this is great if it's going to be to your benefit. You can lower those monthly payments by either starting all over with a new loan term and having a lesser balance that you're paying on. You might have a lower interest rate than was originally agreed upon. All those different things can lower your monthly payments, and they might provide some very much needed financial relief, especially during maybe financially tight or hard times. All right, the second reason that it might be of a benefit to you to consider a refinance would be accessing your equity that is in your property. So as you pay down your loan over time, the value of your property also should be going up. And so the amount of the value of your home versus what you still owe on the home is what is called your equity. Now, refinancing can actually allow you to start the loan process all over, but pull that equity out and then taking on a larger equity for or larger loan for the new loan value and all that type stuff. So this is going to allow you to pull the funds out of your house that could give you the money to do home improvements or debt consolidation or other financial needs. Now, I'm going to give you a big caution. Back when we were all getting in trouble with our loans and our mortgages, we were taking equity out of our house and then choosing to utilize that equity to do things like buy a boat or go on a fancy vacation, or like we were just treating it like a piggy bank. And that is really not a great financial choice to do it that way. So if you're looking to access your equity, please have a really solid financial reason to do that. We don't want you getting in trouble with that one, okay? All right, and the third and probably most popular reason that people refinance, and that is to get a better interest rate. Over time, interest rates go up, they go down. It may be, we saw years ago these amazing interest rates that I don't think we're ever going to see in our lifetime again. But by refinancing to that lower interest rate, you're going to be doing all kinds of things to reduce your payment. So even a seemingly small decrease in your interest rate over the long term can really result in a significant long-term savings. So definitely something to consider if you see that the interest rates are going below where your current mortgage sits. All right, now there are some drawbacks or some things that I want you to consider before pulling the trigger on a refinance. And the first one is, just like it cost you when you purchased your home the first time, there are closing costs associated with a refinance on your house. So please remember that your loan application fees, your appraisal fees, your origination fees, any of those other fees, they all are still going to be in play again when you choose to do a refinance. So you will need to have a little bit of money in order to do a refinance. The second one is extending the terms of your loan. Okay, so let's say your original mortgage was 30 years. You were already 15 years into it and you started over with a new mortgage at, again, 30 years. Now, that's going to definitely decrease the monthly output, but it is also going to be meaning that you're paying more interest over the long run, and there's a trade-off in between there. So you really need to pull that out and do the financial analysis all the way through to the end and make sure this is in your best financial interest to do this. Because yes, it's going to equate to you paying more in interest payments. All right, and number three, the third reason I want you to take a pause and just consider whether this is the right thing to do or not is it will also have an impact on your credit score. So applying for a new mortgage temporarily will most likely lower your credit score, just like any other new credit line of credit is going to impact your credit score. So just make sure that you're making your loan payments on time, that you don't need that credit score for some other purchase. And over time, it's obviously going to recover, but there will be a short-term impact on your credit score. So is a mortgage refinance good for you? Is it right for you? Well, you're going to have to go through each one of those things that we just talked about and talk about them with your significant other, do the financial equations, do the mathematics and on it, and see what it is that you're trying to accomplish. Now, if you're struggling to make your monthly payments, you want to access equity for other goals, or you are eligible for a lower interest rate, yes, let's talk about that. That's a great reason to do any of those things. But again, make a smart and informed decision. Now, if you're considering a mortgage refinance, of course, we have several great mortgage partners that we would absolutely refer you over to see what the best programs are and see how it fits in your world. So if you don't already have a mortgage professional that you choose to work with, please don't hesitate to reach out to us. We'd love to give that referral to you. You can reach me directly, as always, at 480-415-1341. Visit our website at www.living48realestate.com. And of course, if you haven't already, please like our YouTube channel, subscribe to it, click on the little bell icon so you're notified whenever new videos come out. If you're catching this on social media, give us a like or a thumbs up. Give us a comment in the comments below. Let us know how we can best be of assistance to you. And as always, please, if you know of someone who needs this information, share this video, this email with them, and let them know that they have us as a resource as well. Thanks for watching, and we'll catch you on our next video blog.